Well, the markets are open. Happy Monday to you. I'm Arlen Bowling with you. Let's take a quick look at how we're opening up today. And keep in mind, we had an overnight sale or weekend sale of some soybeans and corn. And let's see how we're opening up in the corn market first. Right now on the corn board, we have December corn, well, up a penny and a quarter. We're at 578.5. Now 578.25. Now, when we came in this morning, it was actually a little bit weaker, so it's already turned around. Pretty narrow trading range, though, only about a nickel wide from the high to the low in the overnight trade. All right, let's check out our soybean trade. And here we have January soybeans now 6.5 cents higher at $12.50 3/4. You know, that's only one tick from our high of the overnight trade and early morning trade. So hanging right in there now. March is now trading 5 3/4 higher. We're at $12.62 per bushel. Well, let's check out our wheat quotes provided by Bar Chart. Let's go to Chicago first. December, 7.5 cents higher at 824.5. Well, that's a dime off of our overnight low, almost on the high of the day. Let's check out Kansas City then. December, now 5 3/4 higher at 838.75. Here again, a little over a dime off of its earlier low from last night. And on the spring wheat in Minneapolis, you have December 2 1/4 higher at 1052.25. That would be just 2 cents off of its overnight low. We're about 3 cents from our overnight or early morning high as well. Let's bring in Dewey Strickler of AgWatch Market Advisors. He's based in Franklin, Kentucky. And Dewey, I wanted to bring up the overnight export sale numbers here. We had sales of soybeans to unknown destinations. It was 264,000 tons, 198,200 tons of corn to Mexico. Was that enough to turn the corn around from a penny lower to a penny higher? Is that about what that was worth?
Well, apparently it wasn't enough in corn, might have been in beans.
So beans, 264,000 tons to unknown destinations. I guess, you know, maybe that's helping to prime the pump. A lot of folks are getting pretty anxious that we haven't seen those, 1 million ton purchases, 2 million tons that China did last year.
Well, you got to keep in mind here, Marlon, that when you get into November, if you don't have any issues in the South American weather, your exports in soybeans tend to peak and they can lose anywhere from 65 to 85% going into the end of the marketing year. And that's pretty well been the norm for the past several years.
Are they in pretty good shape in South America so far this year?
They've got maybe a little bit of problem in the southern area of Brazil, but not a big problem. They did have some scattered showers over the weekend. They probably could have used a little bit more. They got maybe a chance to get maybe another shot here this week, but it's just an area that the trade is looking at.
So how far along is South America, for example, Brazil and also Argentina, on their soybean planting? And then, of course, in Brazil, they would be doing their first crop of corn. I imagine they're probably about done with that, aren't they?
They're about done with that. And I think looking at the bean planting, there's something around 70 and just a little bit short of 80%.
And with Brazil, now their bigger corn crop is their safrinha crop, and that'll come in after the soybeans are harvested, correct? They more or less double crop
Correct.
them? Okay.
That is correct.
Are you hearing problems or concerns about fertilizer shortages impacting Brazil then?
Not really a great deal. You're hearing a few, just like you do, here, looking going into for next spring, but nothing that's really out of the ordinary. I think we'll find that producers will learn to deal with it.
All right. Well, if you hear of anything, keep us posted, and we'll keep tabs on that because now the focus shifts to the Southern Hemisphere. All right. We'll pause right here. We'll open up our livestock trade with Dewey Strickler when we come back in just a moment. Back with Dewey Strickler. We're going to talk livestock now. And let's take a look first at what the opening quotes are on the livestock board with our quotes provided by Bar Chart. Live cattle, everything with a minus sign in the front, but the numbers are not that large. We have December live cattle now down 35 cents, now down 37 cents. We're at 131.75 after a high of 131.97 this morning. February currently down just a dime at 136 even per hundredweight. So not a lot going on, just a slightly weaker trend to start things out. Same thing in the feeder cattle market. November down 32 cents at 155.92. And January only down 7 at 157.65. All the deferreds roughly around 20 cents lower on the lean hog market as we get rolling on a new trading week here. December down 57 cents. We're at 75.30. That's about a $0.50 off of our earlier high after the opening. And February is now 35 cents lower at 80.20 per hundredweight. Let's go to Dewey Strickler. Dewey, when we look at our livestock summary as we wrapped up last week on the cattle market, we had a range of live cattle trade that ran 130 to 132 all around the Midwest and the Plains, and dress basis sales 204 to 207. So do you think those markets will improve this week or not?
Well, right now we seem to be more technically driven in these markets on both cattle and hogs, Marlin. We've really developed into some trading ranges here. Seasonally, we should see a little bit of an uptick in the cuts of beef going into the Christmas holidays, but other than that, we don't have a great deal going on. I think there's still maybe a little bit of concern about the economy and Fed's possibly raising rates a little bit sooner than expected. That may be having a bearing on the meats to some extent.
Cash live hogs around the country were up $1.41. This would be on Friday afternoon's update. The carcass basis hogs were down 26 cents, though, across the country. Dewey, on the beef cutout values, we had the choice cuts Friday afternoon down 84 cents. The selects were up $2.24. The choice cut was down about $5 from where we were a week ago. Does that concern you very much?
Not right now for the moment. Like I said, it looks like, we've got a technically driven market. And when you do see that, you just kind of exclude some of the other things that are showing.
All right. Well, very good. Thank you for all the information today. Dewey Strickler of AgWatch Market Advisors. He's in Franklin, Kentucky. So we're off and running, Janet. We'll keep tabs all morning long.